Rougefx. Today we are looking at GBPJPY on a early New York session I just had. Today is January 3rd, 2023. As you can see, this trading window is pretty much indicating our overall trading window, right? So pretty much if this is going to be, in this case, early New York session, or in whichever case, early New York session to maybe late New York session, we can definitely anticipate a pretty live market, a pretty volatile market, a pretty liquid market in whichever case, understanding that, price is definitely moving, reaching for liquidity, or I should say drawing towards any type of liquidity that's ready, set, and available for, of course, market manipulations. Before I do go ahead and continue this video, it is important that you understand that a lot of these entries will have been taken on the 1 minute, 3 minute, maybe even 5 minute, understanding that me acquiring my entry from such a low time frame allows me to better control, or not necessarily control, but better dictate where price is pretty much drawing to as far as liquidity, which type of liquidity pools are more probable to obviously be manipulated as well as rated. This gives you, more of a grasp of, of course, your take profit, of course, because you can definitely, take this short entry and obviously have a plethora of overall take profits. However, only one take profit has liquidity behind it. In this case, it would probably be an unmitigated, or I should say imbalanced price inefficiency. If you aren't familiar with that terminology, understand that we will definitely be going over what that means and how that correlates to overall price action being presented. If you haven't already hit that like button, subscribe to the channel because we do aim to post consistently. Definitely ring that post notification bell because it only means you can stay updated with all our videos. As mentioned in the title, this playlist or video series is going to be called A Stroll Through Infinity, right? This is just understanding the actual practicality of the markets, how this universal pattern literally takes place on every time frame of every range, obviously located within each time frame, within each structural high and low. Of course, depending on price action, you need to understand how to identify this range, how to confirm that it's actually, I guess you could say, how to ensure that your strong high, or in whichever case, weak low, or vice versa, is very much valid. In most cases, your range will probably be the most hard, or the most difficult thing to obviously, I'm not going to say thing, the most difficult skill to obviously acquire, right next to patience, because it's going to take that waiting game. It's going to take that patience to obviously be able to identify your setup, as well as a keen eye, right? You're going to have to pay attention to detail, obviously, when it comes to price action, when it comes to dictating, market structure, as well as correlating it to, liquidity inducements, whether that be trend lines, whether that be SNR liquidity, whether that be maybe you have a session liquidity, all the way from equal highs to slanted highs, vice versa, of course. Without further ado, let's get into this video. So the very first trade that I did find, or did see, or I guess you could say partake in, was, as you can see towards the left, price established a to an extent weak high, right? Price took out this high, but definitely left a any kind of high towards, or if not high, most definitely POI towards the top left of the screen. No need to go check. I mean, it's very much there, but no need to go check. This is very much the 3 minute, so it's obviously going to take its time. Just as the high below, this is established as a weak high. Price retraces or retests, reaches for what? Internal range liquidity. So whether this internal range liquidity looks like liquidity from this equal high, maybe this pretty obvious rejection block, maybe this looks like a bit of a fair value gap to you, right? And as we stretch it out, you can definitely see towards the left how a pretty significant POI was very much left unmitigated to a certain extent. Price obviously ignores any kind of lows, creates a bit of an imbalance price inefficiency, obviously having to rebalance that pricing, right? So how do we rebalance that pricing? It's pretty simple. We flip our point of interest, right? So instead, or in whichever case, we transfer order flow from this overall order block to maybe a breaker on the lower time frame that obviously needed to be rebalanced. Price uses, if not obviously the liquidity pool, price definitely used this weak low or structural low as internal race liquidity. That definitely confirms our strong low. Price continues higher, rallies. Not only provides a choke, right, breaking this or drawing towards this overall weak high. Price retest continues higher and takes out overall, in this case, it would act as liquidity being, equal highs to a certain extent. Price performs a complete reversal, right? So we obviously have a failure swing. Price continues. In whichever case, use these equal lows as liquidity, performs a liquidity grab, obviously manipulates out of that, uses the previous high as a sort of, if it really makes sense, an inducement, right? And then continues towards the lows. Price essentially ended up running sell side liquidity as well as mitigating a pretty obvious unmitigated wick being our POI. What is the liquidity above that POI? Essentially, it's going to be these equal lows. However, if you obviously adjust your line, you can definitely see that there's very much a trend line that you can very much stretch out and acquire a decent, in whichever case, a pretty decent discounted price. Price continued higher. Partials was definitely secured. As you can see, price reacted pretty violently towards this premium pricing, or in whichever case, a POI towards the left, a rejection block, order block, breaker block towards the left. As you can see, price left a pretty steep wick, retested, in this case establishing an overall strong high. As you can see, price performed a liquidity grab of the previous protected high, or the pretty obvious unmitigated wick, unmitigated bearish rejection block, or I'm sorry, bullish rejection block. This becomes a protected high on the lower time frame. Price has all right to continue down to where? Well, as you can see, above our entry, price made a bit of a cumulative pattern, right? So as you can see, it doesn't take a rocket scientist, or it's not really hard to tell what's actually going on at this point. Price is obviously accumulating, manipulating, and distributing. Simple AMD pattern. As soon as the pattern plays out, price has all right to reverse. Now, what I really want you to do is take a step back and pay attention to the actual market structure that's being presented. We have a low, we have a break of a major high, in whichever case, a weak high. Price, in this case, establishes a strong low, liquidity grab, break of structure. So a QM, a protected low, as well as a liquidity grab, break of structure. In whichever case would be, this would be our newly found weak high. We do have a long-term target. However, before we do continue, we have to obviously reach back, retest for liquidity, as I've already said before. However, the key component here is this weak low, this low that didn't necessarily break the protected low from before. This has all right to be used as liquidity. So if you take a step back and really identify what's actually going on within market structure, you can definitely see that prices, continuing to break higher highs, or I guess you could say create higher highs. But in this case, price most definitely targeted an inducement or a weak low, completing our overall continuation pattern, right? No matter if liquidity is as high as here, maybe at the mid, as well as reaching a bit farther down, in whichever, in this case, understand it's still very much valid as long as price is, continuing to create its higher lows, as well as close above the previous low. As you can see, I was under the very much diluted assumption that price was still bullish. As you can see, I got rated out, stop loss hit, as well as a break even of whatever was left in this previous position, which is pretty much fine. It's, trading. It's how, this is how we develop as a trader. This is how we correct our mistakes. This is how we, obviously target easier, or I guess you say more probable targets. This is how we identify our stops, as well as, liquidity. Continuing on, after waiting a brief period, taking a step back and actually gathering my, I guess you could say my sense, or maybe even, I guess you could say gathering my bearings. I was already under the assumption that price was definitely looking to shift in momentum, right? As you can see, price, obviously rallies high after obviously taking me out, or taking out internal race liquidity, rallies high, or I should say higher, begins to form a type of consolidation, right? In whichever case, you would just understand that what's actually happening, right? Price went from an expansion to a correction, obviously ending with an expansion. However, this expansion didn't really go too well, or I should say go too far away from the actual manipulation, right? The actual pool of liquidity that was acquiring or building up liquidity from obviously buy side and sell side liquidity. As you can see, with every higher low being printed, more and more buy stops were put into the markets, as well as sell stops from obviously these failure swings of these bearish candles. It was just simple to understand that price, obviously provided a choke as well as an overall break of structure or a break of a structural low that pretty much confirms our obvious bearish intent. If I go to the 1 minute, we can very much discuss execution. As you can see, price establishes our strong high. We obviously raid lower pricing, retest, leave an inducement. It is understood that this low is weak. Why? Because it didn't take out an actual major low of any kind. This low was ran, or I should say rated. Price retests or reverses, or if anything retraces, takes out internal range liquidity, which would happen to be, if not this bearish rejection block, most definitely this breaker scenario. In whichever case, it would be more of a imbalanced close price action and or inefficiency within pricing. You obviously can keep your stop above the most recent protected high, which in this case was this high right here towards the left. We take our position and obviously target overall lows, which is pretty simple and obviously pretty, honestly, in a sense, it's pretty easy. Why? Not obviously easy, but it's definitely simple, right? Because obviously price ran liquidity and to an extent reversed, right? Performed a whole entire shift in intention, right? So with that being said, price formed a strong high, right? Performed a liquidity grab, break of structure. In that case, price has all right to continue down to where? External range liquidity, which would happen to be what? This weak low. Did this low take out the low before or any kind of low before that? No, this low becomes a target. We target at most the unmitigated wick. Take profit definitely hits. I very much tried to short this confirmation setup, but as you can see, this confirmation setup was definitely taken out at break even. Sad to say. In this case, it's just healthy to understand that at times you're going to lose. At times you just entered too early, too late. At times you didn't enter at all, right? So you missed that trade. But in this case, understand that, at times you're going to think prices, at times you're definitely going to think prices operating off of a protected high, whichever case this high was used as an inducement. Price, continued lower, failed to break an overall low towards the left. At that point, price retraces, reaches for any kind of liquidity, which in this case, price definitely rated this structural high, as well as this unmitigated. In this case, it would probably act as a rejection block, right? That bearish rejection block. However, we definitely have liquidity above, right, within the actual wick of the candle. So with that being said, that would be your overall entry, which we definitely did take. However, it was more of like the confirmation entry. If anything, sorry, not sorry. I gotta watch out. I gotta watch out for my actual win rate, as well as just developing, as well as keeping proper trading habits. Price reaches for obviously internal range liquidity, which would be this inducement. However, price did provide us with a failure swing, take out internal range liquidity towards the left, which in this case would very much be what 3 candle formation is. You can see 1, 2, 3. That becomes our, or I should say, a pretty decent idea of where we want to obviously take our trade. If we definitely look left, we have a pretty straightforward or pretty obvious bearish rejection block, or whichever case bullish rejection block that acts as what? As a point of interest, as something that we can definitely retest off of. And what happened to price? Price definitely used this as a retracement, as well as taking out internal range liquidity. Price very much continues down towards where? Very much this weak low. But okay, so if you really understand or really identify, break down price action to see what's actually happened or what's actually happening, as you can see, in this case, price left a weak low and continued higher. This left a imbalanced price action, maybe a gap within price. In this case, our job is to understand why price decided to stop at this point and not necessarily continue all the way down to our intended POI. As you can see at the start of this, actual trading day or trading window, price definitely left again, price inefficiency. However, it is important to understand what's happening before the actual impulse towards the highs. As you can see, we do have a bearish push towards the downside, right? So if I highlight that actual bearish price movement, you can definitely understand why price very much stopped right here, right? As you can see, we have a consequence of encouragement above it, right? So in this case, this would act as internal range liquidity. This would act as maybe a 3 candle formation in whichever way, shape, or form. I know what you're thinking now. How do we redefine this? How do we redefine this point of interest, this POI, to obviously accommodate for what's happening in price action at the moment? Honestly, this is simply understanding that what obviously can be looked at as a rejection block or order block can definitely be looked at as a breaker, as well as flipped for further understanding of price having and needing to rebalance itself in a way that obviously fulfills internal range liquidity, retest an actual point of interest, and that obviously correlates to the overall trend of the actual market, right? So in this case, it would be this protected low towards this weak high, and that is of course how you would obviously get this bullish trend, right? You'd understand that price is establishing higher low after higher low after higher low, and weak high after weak high after weak high. All you would have to worry about is retest or retracement down to just about anywhere, really, if we're thinking about this logically, just about anywhere, whether it corrects like this, just about anywhere or how, just understanding where internal range liquidity is, right? And understanding where, and of course, actually having the confidence to take them and obviously use, a amount of risk that not necessarily is egregious, however, most definitely worth the actual risk it takes to obviously, participate within this industry. I hope you guys enjoyed this video. If you did, be sure to hit that like button, subscribe to the channel, because we do aim to post consistently. Ring that post notification bell, stay updated on all our videos. And of course, it only means that you can obviously get our next post, or I guess upload in this case. If you did enjoy or do enjoy these type of videos, me kind of going through the different trades that I may or may not take or miss or lose, definitely hit that thumbs up, subscribe to the channel. It only lets me know that y'all want more videos like this. This has been a stroll through infinity. Until next time on Jody FX, y'all have a great night.